Howdy, everybody. Welcome, Liberty Call. Today is Tuesday, February 4th, 2025. Hope you're having a fantastical day out there in the interwebs. Kind of gray and overcast here today in Colorado. I was out this morning, had to go get my physical done. So I'm in, I'm not in peak health or anything, not with my arthritis and stuff, but not going to die. That's awesome news. So, anyways, but yeah, it's great. It's weird. I left here I guess it's about 9:30. I left this morning and it's like 45, 50, yeah, maybe in the mid 50s when I left here. I get up into, the little town I go to for, supplies and stuff, anyways. And it was like 20 degrees colder. It's crazy. Anyways. All right. Well, markets are bouncing back with the S&P 500 and the NASDAQ in the green as tech stocks lead the charge. Woo! Planeteer is soaring 23% on strong earnings, and investors are eyeing reports from Alphabet and AMD. Meanwhile, Trump has delayed tariffs on Canada and Mexico, easing some trade war fears, but China isn't backing down, retaliating with its own tariffs and launching an antitrust probe into Google. Let's dive in and break it all down. But before we do, yes, the three people out there who watch this on a regular basis, give me some thumbs up, a like, share, subscribe, and follow, and hit the notification bell. That's what I was trying to remember. All right, well, let's hop into the markets. Let's see here. Dow Jones was up 0.3%, 133 points, closed at 44,555. S&P 500 up 0.72%, 43 points, closed at 6038. NASDAQ up 1.35%, 262 points, closed at 19,654. The VIX was down 8.22% today. It's at 1711. Canada up 0.15. Brazil down 0.44. And Mexico up 1.18. In Europe, Germany was up 0.39%. The UK down 0.15. France up 0.2%. Netherlands up 0.35. Spain up 1.37. Italy up 1.38. Switzerland down 0.2%. And Portugal up 0.78. Russian exchanges split today. The MOEX down 0.29, RTSI up 1.13%. And the overnight markets, the Nikkei in Japan was up 0.61, Australia down 0.06, New Zealand up 0.6. Most of the Chinese markets were closed. The Hang Seng was open. It was up 2.83%, and the Taiwan weighted up 0.44. All right, so those are our markets for today. Let's jump to the market recap. U.S. stocks gain as China tariff fears calm. Quarterly earnings deluge in focus. All righty. U.S. stocks climbed higher on Tuesday as investors navigated the beginning of a renewed trade war with China and a wave of corporate earnings reports. President Donald Trump's decision to delay tariffs on Canada and Mexico for 30 days helped ease fears of an all-out global trade conflict, but his tough stance on China suggests a prolonged economic battle. While Trump postponed tariffs on Canada and Mexico, his administration moved forward with 10% tariffs on Chinese goods, prompting swift retaliation from Beijing. China responded by imposing a 15% tariff on U.S. coal, liquefied natural gas, and a 10% duty on crude oil, agricultural equipment, and automobiles. Additionally, China placed export restrictions on rare earth metals, which are critical for manufacturing high-tech products. Beijing also launched an antitrust investigation into Google parent Alphabet and added several U.S. firms, including PVH Corp and Illumina, to its unreliable entities list. Amid heightened economic uncertainty, Wall Street is assessing its outlook for Federal Reserve rate cuts. Morgan Stanley now predicts only one cut in 2025, likely in June, as trade tensions and inflation concerns make the Fed more cautious. Corporate earnings took stage, with PepsiCo falling 2.3% on weak revenue growth. Meanwhile, Spotify surged 7% after exceeding revenue expectations, and Planeteer jumped 22% on strong AI-driven demand. However, Estée Lauder and Merck fell after issuing cautious guidance. Alphabet will report earnings after the closing bell, with investors closely watching AI spending plans. And finishing up here, crude oil prices fell as traders worried about potential economic slowdowns from tariffs. WTI crude dropped 0.49% to $72.80 a barrel, while OPEC Plus maintained its output cuts despite pressure from Trump. All right, so there's that. Let's get to our next article. This one comes to us via Zero Hedge. Job openings unexpectedly crater by more than 500,000 as wheels start to fall off the job market. That's not positive news. After a surprising surge in job openings over the past 2 months, the latest report from the Bureau of Labor Statistics revealed a sharp decline. December job openings dropped by 556,000, falling from 8.16 million to 7.6 million, marking the second lowest level since the COVID crash. This decline was significantly below Wall Street estimates, with only Societe Generale coming close with its $7.5 million forecast. Sector-specific declines. The biggest job losses were seen in professional and business services, down 225,000, reversing the previous month's record surge. Healthcare and societal assistance down 180,000. Finance and insurance down 136,000. Only arts and entertainment and recreation saw an increase, adding 65,000 jobs. The number of job openings is now just 714,000 higher than the total unemployed workers of 6.89 million, down significantly from over a million last month. This places job openings at the lower end of pre-pandemic levels from 2018 to 2019. A silver lining, while job openings data was a shock, the report did contain some positive signs. Hires increased by 90,000, rising to 5.46 million. Quits also edged higher to 3.2 million, suggesting some workers still feel confident about job prospects. And skepticism over the data. Despite the drastic drop, some analysts question the reliability of the data. The Bureau of Labor Statistics response rate for JOLTS remains at a record low of just 33%, making the accuracy of these numbers highly uncertain. Given the political landscape, some speculate that a weakened labor market could prompt the Federal Reserve to consider rate cuts sooner rather than later. Friday's non-farm payroll report will be the next major test for the labor market's strength. Awesome. All right, finishing up also from Zero Hedge, 20,000 government workers take Trump buyout offer as mass layoffs loom. And if you haven't been to to Reddit and seen the Fed News sub, it is gloriously entertaining to watch these. I mean, I have to imagine the ones that are bitching and moaning the most are probably the ones who sit around and play Minecraft or not Minesweeper or whatever do nothing tasks in their day-to-day work. So, all right. Diving in, around 20,000 federal workers, roughly 1% of the federal workforce, have accepted the Trump administration's buyout offer, which allows them to leave their jobs immediately while continuing to receive pay through September 30th. With 2 days left before the deadline, officials expect more employees to opt in. The buyout, part of the President Trump's broader effect to shrink federal government, has faced backlash from unions and other organizations. I'm not sure why there's unions for public employees. They negotiate with the people. They don't need people to intermediaries in the way, arguing that it is illegal and lacks congressional authorization. Well, I'm sorry, you work at the pleasure of the people. You can be fired at any moment. However, the administration maintains that it is fulfilling a campaign promise to reform the federal bureaucracy and eliminate wasteful spending. Every one of those jobs is wasteful. One agency notably impacted is USAID, which oversees foreign aid programs, which I know most people probably think I'm a conspiracy tinfoil hat wearing conspiracy theorist, but USAID is nothing more than a front organization for the CIA, going around creating problems in small countries around the world so that we can basically control them. The administration has long criticized the agency for funding woke anti-American projects and sees the buyout as a tool to rein in rogue employees. More layoffs on the horizon. While some workers taking the buyout may have planned to leave the government service anyways, the federal workforce sees an average attrition rate of 6% per year. Others may soon have no choice. A leaked General Services Administration email warns that mass layoffs are likely once the buyout period ends. The GSA's Federal Acquisition Service is reportedly being asked to cut its program by 50%, a move that could result in deep staffing reductions. Despite the administration's push to freeze hiring, some agencies continue to bring in new workers, complicating efforts to downsize. With the buyout window closing soon, major federal workforce reductions, either forced, voluntary or forced, appear imminent, setting the stage for a significant restructuring of government operations in 2025. Yeah, again, these are some, just reading the reactions from a lot of these people. They are some of the most entitled, obnoxious pricks I have ever had the pleasure of reading. And the government's not supposed to be efficient or turn a profit, blah blah. I understand it's not supposed to turn a profit, but it is actually supposed to provide a service to the American people. And when all you're doing is working in an agency that is unconstitutional in the first place, like Department of Education, EPA. I mean, outside of DOD, most things should not exist at all. Most of these things should be handled at state agency levels or lower. The federal government has no jurisdiction in a lot of these areas. I mean, like drug enforcement. There's nowhere in the Constitution that gives the authority to the United States government to enforce cannabis laws or cocaine or heroin or anything. I mean, local states can bar or prohibit whatever they want. The federal government can't. So anyways, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help you get on track. All right. Well, hope everyone has a wonderful evening. I'll talk to everyone again next time. Adios.